get into some macroeconomic perspective, specifically on Zambia, because interesting news there. We're seeing for a long time, we haven't seen non-mining investment in a big way entering the Zambian territory. And it seems that South Africa's AGZAM, which is a subsidiary of Ilovo in South Africa, is looking to make a major investment that way.
Yes, I mean, Ilovo, I think, has been looking at Zambia for some time. And, the sugar industry in Zambia has always been one which sort of been on the periphery of interest, where you go back a few years, you had picked up some stories of potential investment. Now, in this case, they're talking about investing about $250 million. It's not just simply in sugar plantations, but it's in ethanol production as well. So you're not only going into the primary sector, you're going to the manufacturing sector as well, which I think is, a very nice type of investment for the country. Now, interestingly enough, I mean, agriculture only comprises 6% of GDP in the country, so it's relatively small. It's similar to South Africa to some extent. So it's relatively small from an overall GDP point of view. But I think it's a country which is relatively rich in water. It's got good rivers, and the rainfall generally is okay, and it makes it a relatively promising investment from an agricultural point of view.
Of course, we are looking at two goals being struck as well, because we're looking then at Zambia, who's looking to diversify its copper-reliant economy, achieving that one prospect, one would assume, and then also in catering to that dominant sector, which is that of mining, looking at another energy source coming its way as well.
Yes, I mean, it's a nice, when you think about renewable energies, ethanol is a much better version than from using sugarcane is a much better version than using corn, because of the conflict that you had with food fuel for food consumption. So in that sense, it is a very nice type of investment to go into the economy. I mean, they're talking about something like 4,000 jobs being created over the next 2 years, which is quite healthy. Production is expected to start in 2013. So obviously there's quite a long lead into when the actual productions come online. But overall, it's a nice balanced investment for the country, and it's a nice sizable investment as well.
In terms of export capacity here, we know that the EU stands as a very prominent trade partner already when it comes to sugar exports going that way. To what extent is regional trade picking up and a focus directed more so that way moving forward?
Well, I mean, that's an interesting one, you see, because what's not exactly apparent when you look at the export data of Zambia, I mean, when you talk about the copper reliance, it's more so export in the export field than necessarily in the production field, because the primary sector, for example, overall mining sector is just 10% of GDP. But when you take copper as percentage of total exports, it jumps up to about 90%. Right? So similar case to Nigeria, where you have an oil sector which absolutely dominates the export. So, when you start to talk about how much would this impact on regional trade, well, it's really at the margin, because non-mining exports is such a small percentage of Zambian exports to start off with, that when you start adding these types of numbers in, it's probably got a long way to go to make a meaningful impact.
At least a start, and that we can say is lacking in Nigeria when it comes to some of the progress we're seeing on the political front. So let's turn attention there, because we didn't see that election get underway, and yet the markets seem to be taking it in its stride.
I think it's a case of most people have accepted that there were bona fide intentions by the Electoral Commission to delay it. Not that it was a best outcome. Clearly, it's not a desirable outcome to start off with. But I think everybody accepts that the reasons for the delay were absolutely necessary and had to happen. So in that sense, a lot of the people are saying, well, we'll rather view it as a delayed election it shows intent to run a proper election than to try and run it through and cram it through.
Are you buying the story?
It seems to be okay. I mean, look, this is a lesser of two evils situation. There's unfortunately not a positive outcome here, because what it tells you is that the Electoral Commission just simply hadn't prepared properly.
Yeah.
And it is unfortunately an indictment of the Electoral Commission's ability to run the election. But that they were willing to withdraw at the last minute, and in fact delay it twice, because remember the initial delay was to Monday, and then they canned that one as well, and they said, okay, let's move all of it back by a week. I think did show a resolve to make sure let's get it right this time.
Yeah.
Now, hopefully, they're going to get it sorted out. So I do buy, the intentions of for the delay. And when you look at the local market, people seem to be happy. You look at the currency, for example, the reaction on the currency. It went, I think, just slightly above 155, and it went back also above 154, and went back below 154 again. So the market seemed to be comfortable with it. The domestic opposition politics, yes, there was a little bit of noise, but opposition politicians seem to be buying it. So, overall it seems to be, legitimate.
And just looking at some other economic data, we've got forex reserves not going anywhere. And, we always see hints of this increasing before it slips back yet again. So how are you reading that situation?
Well, there's two dynamics here. Firstly, you refer to the hints of it increasing, which is a classic thing which I've picked up in the first week. 1 week into the month, the reserves always seem to go up, and then they drop again towards month 10. So there seems to be a bit of a seasonality intra-month, which one probably needs to consider. And this time around, for example, we started at $33.2 billion at the end of Feb, and it went up to $36.5 billion 1 week into March, and then it dropped all the way back to 33.2. Now, that at the moment, though, we have to overlay that seasonality with just general, increased demand for dollars around the election period. Again, February we saw a total demand of $2 billion in the wholesale auctions. In March, it jumped up to $4.1 billion. Right. So the central bank, they didn't meet all of the demand. They sold $1.8 billion in February, and then they sold $3.4 billion in March. But that immediately places extra strain. Now that is probably more related to concerns about the election, just general nervousness, and than anything else, which should drop back again as we go into the second quarter. So I would expect that maybe what we saw in March was a little bit of an anomaly, but I do think that underlying, given the extent of the government spending that's going on in the economy, we're going to see continued demand for foreign exchange, and we're not going to see a rapid growth in reserves. I think there should be incremental growth in reserves, but I don't think we're going to see a rapid growth in reserves for the rest of the year.